Hey, what's up guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. I also want to remind you guys, be careful with scammers in the comment section of my videos. They'll post a picture like they're me, and they will make comments to your comment and ask you to, contact them on WhatsApp and all this other stuff. Guys, that's not me. Those are scammers. So please don't fall for any of these scammers in the comment section of my videos or on Instagram. A lot of these scammers are getting smart. They're going to Instagram and cloning my account and then DMing you as though they were me. And then once they start a conversation with you through DM, they're asking you guys to send them money so that they can trade for you, whether it be Forex trading or Bitcoin or whatever it is. It's all scams. So just be careful with that. Also, if you want those 6 free stocks from Webull, Webull is going to give you 6 free stocks when you open up a new Webull brokerage account, put at least 1 penny in that account. They're going to give you 6 free stocks valued all the way up to $12,600. So after the video, go down to the description box of the video, click on that Webull link, open up your new account today, go get that free stock, go get that free money. I'm going to be talking about the stock market again. And the reason I'm spending so much time on the stock market, guys, in my videos is because I still want you guys to understand what a tremendous opportunity is right now for you to build wealth. While all of our great companies and our great ETFs are on sale. And the reason they're on sale is because of inflation, is because we have a slowing economy, right? And our investors, when I say our investors, that's probably the wrong word to use. Let's say institutional investors are starting to pull their money out of the stock market, and that's causing the stock market to be extremely volatile day in and day out. You may be asking yourself, well, why are these institutional investors pulling their money out of the stock market? Well, they're pulling their money out of the stock market because the companies that make up the stock market are not growing right now. And the reason these companies are not growing is because, one, they can't borrow money cheaply anymore. And two, consumers are starting to spend less, right? When consumers spend less and companies can't borrow money cheaply to invest in their growth, then they don't grow. And investors, institutional investors, start getting nervous and they start pulling their money out of these companies through the stock market and putting their money in other things where they believe is safer and where they can make money. And then you got investors like you and I. We make up about 25% of investors who actually buy companies in the stock market or buy shares of companies. And then the institutional investors, they make up about 75% of investors who buy shares in companies through the stock market. Institutional investors are pulling out. Why should we be pulling out? Well, you got to understand, institutional investors are investing other people's money. So they have a fiduciary responsibility to pull money out when they're not certain about whether they can effectively make money with their clients' money. See, you and I, we're our own client, right? We're our client. We don't invest money for other people. We invest money for us. And if we know anything about the stock market, really the time to build wealth for people like you and I, just normal everyday folks, really the time to build wealth is in volatile times like this. If we are okay with putting our money into companies, right, and leaving it there for 3, 5, 7, 10 years. As long as we're comfortable with that whole pattern, then it's a great time for us to do it, because while we're buying these companies right now at a discount, they're on sale. Their per share stock price is lower than where it's historically been. So what happens is that we can buy now and hold those companies until those companies' per share stock price return to its all-time highs again, which I believe in most cases they will, then we provide ourselves with an opportunity to create net worth, right? If I buy a share of a company at $10 a share today, and I hold it for 5 years, and that company rebounds back to $30 a share in 18 months. I bought it for $10 a share. In 18 months, it's trading at $30 a share. I just made $20 per share on that investment, which increased my net worth. So you may be asking yourself, well, why won't institutional investors do that? Well, they do it. They just do it differently than you and I, right? Right now, they've made a bunch of money from the last year, right? You got to think about 2021. These institutional investors made a lot of money in the stock market. So all of they're doing is just taking profits off the table right now and setting them aside to safety until they can predict that the stock market is going to be a little bit smoother and on an upward trajectory. Then they will put their money back in and then commence to doing the same thing we do as normal, regular investors. Now, I will tell you, institutional investors do some short-term investing. So they'll do some trading, because that's what short-term investing is, guys. It's trading. In the first couple of days of last week, probably Monday through Wednesday, well, no, not Monday, but Tuesday through Thursday of last week, investors were doing, institutional investors were putting their clients' money short-term, right? They were putting money in short-term, and then what happened? They pulled it back out on Friday. Investors like you and I said, whoo, the market's starting to rebound. Now it's time for us to jump in and start buying, which it really wasn't rebounding. It was a temporary rebound, right? And that's what institutional investors made that happen. They manipulated the market, made that happen, and they made some money, and then they jumped out again on Friday. That's why you saw the market decline last Friday on June 3rd. We don't want to be trading. We want to be investing. So it's okay for us to be able to dollar cost average in every single day, every single week, every single month, and buy our favorite companies and buy our favorite ETFs, because what we're and our favorite cryptos, but what we're trying to accomplish is long-term growth. We're not trying to be a trader where we're in 2 days and we're out, we're back in, we're back out. We don't want to do that. We want to be able to just say, well, okay, I understand the concept of buying Walmart at a discount today, holding Walmart stock for 18 months, 24 months, 36 months, in the hopes that Walmart will be, their stock price will be better 18 months from now, 36 months from now than it is today, since it's on sale today. That's really the concept that we're trying to do, guys. That's simple. We're just trying to buy these companies while they're at a discount, buy these ETFs while they're at a discount, buy these cryptocurrencies while they're at a discount. And then the plan is at some point in the future, whether it be 12 months, 18 months, 24 months, 36 months, some point in the future, these investments will go up in value, and then that's where we make our net worth gain. So we're trying to be investors. We're not trying to be traders. We just do not have the technology behind what institutional investors have. We don't have the technical analysis. We don't have the algorithms. We don't have none of the information that they have in order to make them effective at being traders. We don't have that, right? All we pretty much got is a laptop and Google. That's pretty much what we got. And that's not enough, guys, to be an effective trader. But it is enough to be an effective investor if we have a long-term hold pattern. So back to the Webull app and my challenge that I'm doing with my subscribers, which is the $5 a day investment challenge, guys. See, $5 a day is pretty much attainable for most of us. I'm not saying all of us, but most of us have $5 that we can set aside every single day and buy a fractional share of some great companies. So guys, you know, if you got $5, you can buy a fractional share of Apple. You can buy a fractional share of Amazon. You can buy a fractional share of Facebook, right? You can buy a fractional share of Tesla. And that's just the minimum. But if you got $10 or $15 or $20 or $25 a day, guys, you can buy these great companies while they're at a discount. And you can buy them through fractional share trading using that Webull app. So that's why I'm encouraging you guys to use Webull. And because I use Webull every day. Plus, they're gonna give you those 6 free stocks like I mentioned earlier in the video, just as a thank you to signing up and starting to use their app. Webull is a relatively new online brokerage platform. It's a self-directed brokerage platform. The reason they give away the free stock is that is a thank you to the people who decide to sign up and start using their app. They're trying to increase the number of users that use their app, right? So that's the reason they're willing to give away the free stock, because they want users. They want people actively on their platform trading every day. That's how they make money. They don't make money from you, but they make money off of the trade. Pennies off of every trade they make, but that's okay. Everybody got to get paid, guys. Nothing's free in this life. But for me, I don't even notice it. But I do notice how convenient and easy it is to use the Webull app. And they give me free stock, right? I can't beat that, guys. So let's not delay. Let's take action today. We want to build our wealth one day at a time. We want to start now. We don't want to wait 2 weeks from now. We don't want to wait 3 weeks from now. We don't want to be taking advice from people who are not building their wealth. We don't want to be taking advice from people who haven't built any wealth. I want to be listening and taking advice from people who are actively trying to build their wealth, or they have already built their wealth. Those are the people I want to listen to. I'm not going to listen to people who just want to sit on the sideline and be pessimistic and paint this gloomsday picture of what's happening in our financial world. Yeah, our financial world is not very good right now. Our economy is slowing. Inflation is high. We're in a recession, but that's okay. This is where millionaires are made in financial situations like this. Why? Because now is the time you can buy these companies at a discount, hold them for a period of time, and they start selling at a premium again. Now you've just made some good net worth gain. You've made some good profit that you can either take at that time, or you can continue to allow it to continue to grow and compound itself. That's up to you. Well, all right, guys, I appreciate you stopping by the channel. I appreciate you watching the video. I would ask you, if you're stopping by for the first time, please consider subscribing. I would ask you to share the video and certainly smash that like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.